Yo, what is up guys? It's Kiss, back with another video. It's been quite a while. Today we're going to be doing a breakdown on today's trade, how I framed my bias this morning. It's going to be framed off of something called a London reversal. So typically when you want to be trading the New York session, you want to be looking at the London session to frame whether or not your New York session is going to be a high probability. Now, in today's scenario, we have our London reversal profile. Now, with this profile, you need to have three things. So with these three things, you need to have a higher time frame narrative. You need to drop down to a lower time frame from that higher time frame and look for a biased or confirmation, and then drop down one more time frame and look for your entry. Now, let's get right into this trade. 1 hour order block, which is our higher time frame premise. Now, what happened prior to New York Open? So we had New York Open here at 9:30, right? We have New York Open, price opens up. Prior to New York Open, we had this price action here. Now we're going to be paying attention specifically to this consolidation here. It's already annotated for you there. I did that just so it's more visual for you, those of you that are visual learners. What actually occurred is market closed at 4 on this candle here yesterday, Wednesday. Today's Thursday. Price rallied lower, formed a low of day here. Market opened here at 6 p.m., which is typically our Asia session open. Well, it's not typically, it's always our Asia session open. So let's go ahead and mark that out right there. That's going to be our starting premise going into the foundation of the trade. Now, what happened during Asia? We swept previous day low, but typically when we sweep a low and you want it to be a very high probability sweep is something called inducement. Now, inducement occurs when price sweeps a low or a high, in this case a low, and it taps into an imbalance or a PD array. I like to base my entries off of the fair value gap, and I like to use order blocks as confirmation. So in this scenario, if we formed a 1 hour PD array prior to Thursday opening candle, right? So prior to that, we formed a 1 hour fair value gap, and we also formed, as you can see here, an order block within that fair value gap. It's called a unicorn right here. Now, it's typically a unicorn when it's a breaker, but I like to consider it a unicorn when it's an order block and or breaker lining up with that fair value gap. Let's drop back down to the 15-minute, and let's go ahead and review that inducement. So this is inducement right here. This portion of price is inducement, and a lot of turtle soup traders like to take trades off of inducement when price sweeps a low and it taps into a higher time frame PD array, or just a PD array that supports price in your direction. Now, with this in mind, price displaces above the liquidity sweep, right? So where's our liquidity sweep? It's from this high to this low. That's our liquidity sweep leg. This is the leg that swept liquidity. What time did price reverse into the breaker or order block, right? So this is a breaker, but if we go to the 1 hour, it's an order block. So an order block on a lower time frame is just a breaker. Just a little tip for you guys. Let's go back to the 15-minute. At what time did it retrace, right? I already have it marked out for you guys. It retraced at London Open, and this is what we're going to use right here. For a London reversal to occur, it's important to know when the protraction occurs. Now, as I mentioned here, protraction equals Judas swing or manipulation. When does the protraction occur? We want to study when it happens. This is when you want to know when the Judas swing occurs to find the expansion. At London Open, we instantly manipulated, right? Into what? Into our 1 hour order block, right? So that was our protraction into a 1 hour or higher PD array. And this is going to be our Judas swing for the day. Now we have established a bullish bias. If we look at the daily candle, right? Pay attention to this 18 open. That's where the daily candle opened. If we look at it in a daily candle perspective, so at one point, price was just a solid candle like this, right? Obviously with like a little wick to the upside because price ran up higher there. So at one point, the daily candle looked like this. Now what happened when this inducement occurred? Our expansion, right? So if we're looking at the daily, we're looking for the continuation off of what the open already did, right? This is the key right here. Any retracements towards the London manipulation or the daily low are buying opportunities, right? If we're in a bullish expansion day, right? But how can you capitalize off of a retracement here? Now, this is when, remember the steps I mentioned in the beginning? Step 1, it's going to be the higher time frame narrative. Step 2, you're going to drop a time frame, in this case the 15-minute. You're going to look for your confirmation, right? This is when we want to be looking for buying opportunities, because on the retracement towards the daily low, every retracement towards a daily low tapping into a PD array is a buying opportunity. I want to make it short for you guys. I want you guys to dissect as much information from this video as possible. I don't want to rant too much like ICT does. But now let's go ahead and pause here with the daily candle. We've now established how to look for a London reversal. Now let's establish how to find an entry. Let's dive into this section and we'll dissect price action here. Alrighty guys, we're now on the 5-minute time frame, and this is what I mean by paying attention to how price reacts off of the 15-minute. Sorry, my camera's a little laggy right now, but just don't mind that. Now, what happens when price taps into the consequent encroachment or the 50% of the 15-minute? Price respects it, right? But obviously in hindsight, we know that. How do we know that in real time? You want to be watching how price reacts to it, okay? Now, for some traders, this may be your entry, and you may trade the 2022 model on the 15-minute, and a retracement into the 15-minute consequent encroachment may be your entry. But for me, that's too risky. Okay, so what I mean by that is, let's say you enter here, right? And price wants to dip lower, wants to retrace back to that 10 a.m. open, right? And wants to look for that order block. You're going to be incurring a significant amount of drawdown, about 100 points, before you actually start to see green. For me, what confirms that long biased is when price starts to disrespect bearish PD arrays. Now, what do I mean by that? And I actually teach this as my model on Twitter. If you guys don't follow me on Twitter, just a quick plug, at Kislev Prince, Kislev Prince. Just follow me on there if you guys don't already. Anyways, I do teach this model. It's the first pinned tweet on my profile, and I basically go over how to trade the model. Okay, so it goes from higher time frame to lower time frame, very mechanical system. So what I like to see is, I like to see price respect a 15-minute, give me confirmation on the 5-minute. I want to see more confirmation. How do I look for that confirmation? It's going to be a bearish PD array to be disrespected, whether it's a fair value gap or it's an order block. What I mean by that is, let's forget about this BPR for a second, right? At one point in time, this was a SIBI, right? At one point in time, this was a bearish imbalance. When price retraces into it, maybe there were some 2022 traders going short off of this bearish imbalance. I'm not looking for that. I'm looking at the higher time frame on the 15-minute, and I'm looking for price to disrespect. All right, so with this in mind, you can have multiple entries. You have multiple entries. One of the potential entries can be a close above. It can be a retracement into the 5-minute fair value gap. But now we have a BPR here. And just pay attention to how price respects the BPR in the following candles. Okay, so you can have the close above the SIBI. You can have a retracement into the BISI, a retracement into the BPR. Those are just some of the entries you can do. So if you don't know already, NQ is NASDAQ, ES is the S&P 500. And they should be correlating perfectly to the tick. But sometimes there are certain movements that are a little bit uncorrelated. Now, this is when the market is tipping its hand to you, and this is something called SMT, which I already marked at these lows. But let me pull up the screenshot real quick. Alrighty, guys, so here we have the screenshot, and this was actually from when price was actually developing in real time. So from this red dot to this red dot is the same as this red dot to this red dot. So this is ES with bars, not candles. This is NQ on the left. So what did ES do? I want you to pay attention to the lows that were made. On NQ, the lows on NQ were not swept. This low, which was at around 1145, was not swept. On ES, that 1145 low was actually swept right there. That is SMT, smart money tool, smart money technique, whatever you want to call it. It's SMT at the end of the day, and that's the market essentially telling you there is a break in correlation, and eventually that leads to an expansion or reversal depending on the direction. So obviously in this direction, we're coming off of a 15-minute SMT is formed, we're going to expand higher. Now, if we were already expanding higher and we reach a certain PD array and there's SMT at that high or the low, then that's going to cause a reversal. It's a little bit more complicated, but that's just a quick breakdown of it. Let's actually dive deeper into a screenshot that I took with a 5-minute that essentially it's the same thing, but just on the 5-minute chart. Alrighty guys, so here's the 5-minute chart. Same exact thing, just more refined on the 5-minute. We have that 15-minute swing point we were watching, BPR as we annotated right here. This is the low. That was the low formed once the expansion, right? So this is the important low that we need to be looking at. And essentially price rallies to previous day high, which is our exit. But yeah, guys, that's going to be it for today. If you guys enjoy the video, give it a like. If you guys want to see more content, just put it in the comments. Give me some ideas. I'll make some videos soon. I want to start getting back into my YouTube grind, whether it's shorts or just YouTube videos just like this one, where I do trade breakdowns and recaps. With that being said, guys, peace out, and I'll see you guys next time.